This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
When President Donald Trump sat down to lunch with his Japanese counterpart this month, talk turned quickly to how Tokyo could help realize a decades-old proposal to unlock gas in Alaska and ship it to U.S. allies in Asia. Trump and his energy czar Doug Burgum framed the venture as a way for Japan to replace Middle East energy shipments and address its trade imbalance with the U.S., according to two officials briefed on the closed-door talks. Japanese Premier Shigeru Ishiba, eager to ensure a positive first meeting and stave off damaging U.S. tariffs, struck an optimistic note about the Alaska LNG project despite Tokyo's doubts about its viability.
Oil prices settled down more than $2 a barrel on Friday, posting a weekly decline as investors grappled with a fading Middle East risk premium alongside uncertainty about a potential peace deal in Ukraine. Brent futures settled down $2.05, or 2.68%, to $74.43 a barrel, while U.S. West Texas Intermediate crude settled down $2.08, or 2.87%, to $70.40. Brent closed 0.4% lower on the week, while U.S. crude futures posted a 0.5% weekly loss. The relative calm in the Middle East as the Gaza ceasefire held has reduced risk in the market, said John Kilduff, a partner at Again Capital in New York.
Moving on to the top news in the energy sector.
U.S. President Donald Trump's administration is piling pressure on Iraq to allow Kurdish oil exports to restart or face sanctions alongside Iran, 8 sources with direct knowledge of the matter told Reuters. A speedy resumption of exports from Iraq's semi-autonomous Kurdistan region would help to offset a potential fall in Iranian oil exports, which Washington has pledged to cut to zero as part of Trump's maximum pressure campaign against Tehran. The U.S. government has said it wants to isolate Iran from the global economy and eliminate its oil export revenues in order to slow Iran's development of a nuclear weapon.
The European Union will seek more gas from countries including the U.S. to replace Russian supplies and expand renewable energy faster to cut its overall reliance on the fuel, the EU's Energy Commissioner has said. The EU has pledged to quit Russian fossil fuels by 2027 in response to Moscow's 2022 invasion of Ukraine. While Russian pipeline gas deliveries have plunged, the EU increased its imports of Russian liquefied natural gas last year. Instead of using taxpayers' money, citizens' money, to pay for gas where the revenue goes into Putin's war chest, we need to make sure that we produce our own energy, EU Energy Commissioner Dan Jorgensen said in a joint media interview, referring to Russian President Vladimir Putin. Next, we have the top news in metal markets. Gold prices eased on Friday as investors booked profits from the previous session's record high, but were set for an 8th straight weekly gain, driven by strong safe haven demand amid concerns over U.S. President Donald Trump's tariff plans. Spot gold shed 0.1% to $2,939.63 an ounce as of 2:24 a.m. Eastern Time, 1924 GMT. Bullion has gained around 1.9% this week after rising to a record $2,954.69 on Thursday. U.S. gold futures settled 0.1% lower at $2,953.20. It's just a classical movement of new all-time highs and profit-taking. But the fundamentals for gold remain solid, said Alex Ebkarian, Chief Operating Officer at Allegiance Gold.
Copper prices retreated on Friday on concern about demand in China after inventories rose and on uncertainty over possible U.S. tariffs. 3-month copper on the London Metal Exchange was down slightly at $9,561.50 a metric ton by 17:15 GMT, having touched its highest level in 3 months a week ago. Copper inventories in warehouses monitored by the Shanghai Futures Exchange climbed 13% over the past week, data showed on Friday, having soared by 162% since late January.
We will now look at the top news in the agricultural sector.
India is likely to raise import taxes on vegetable oils for the second time in less than 6 months to help support thousands of oilseed farmers reeling from a crash in domestic oilseed prices, two government sources said on Friday. The hike in import duties by the world's largest importer of edible oils could lift local vegetable oil and oilseed prices, while potentially dampening demand and reducing overseas purchases of palm oil, soy oil, and sunflower oil. The inter-ministerial consultations regarding duty hike are over, said a government source, who did not wish to be named as he was not authorized to talk to the media. The government is soon expected to raise the duties.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.